Today we are going to look at the impact of a pandemic, or specifically COVID-19, on an entity's financial statement. Our very first consideration is the going concern assumption. So when should the assessment be made? Now we know well that when preparing the entity's financial statement, the going concern assumption is very important. So when should this assessment with regards to going concern be made? Are we looking at the reporting date? What if it is already after the reporting date? Now, if you look at COVID-19, it surfaced around December in China. So what if the entity's financial statement is 31st December 2019 and it doesn't affect your entity until after the year end? So how do we deal with this? Now, let us look at the provisions available under the IFRS and the conceptual framework. Based on the conceptual framework, the entity shall prepare the financial statement under going concern assumption, meaning the entity will continue to be in operational existence for the foreseeable future. Meanwhile, our IAS 1 requires the management to assess the going concern assumption when preparing the financial statement. Thus, it can be concluded that the assessment of going concern is not made on the reporting date, but rather when preparing the financial statement. Meaning, as long as the financial statement is not issued, the consideration has to be taken into account. So, in the event the entity is still in going concern, a disclosure is still required regarding the many uncertainties surrounding the assessment. So what if the entity is not in going concern? Meaning, the management does not believe the entity will remain in business within the next 12 months. Therefore, the financial statement must be prepared differently. Now, let us proceed further on the impact of COVID-19 on IAS 10. Now, just for your knowledge, the impact of this pandemic basically affect more than your going concern assumption and also the IAS 10. Quite a significant number of accounting standards are affected by this pandemic. So let us look at the next one, which is on IAS 10. Now, basically, IAS 10 relate to material events occurring after the reporting period. Basically, we are going to classify this event as adjusting or non-adjusting event. Now, the pandemic and the measures taken to contain them is definitely a significant event after the reporting period. Now, basically, if it is an adjusting event, the financial statement will be adjusted, while if it's non-adjusting event, then a disclosure will be sufficient. So basically, when we talk about whether it is adjusting or non-adjusting event, now we have to look at COVID-19. Does COVID-19 affects the entity or the measures taken by the government? So I believe it is the measures taken by the government to contain the pandemic that is affecting the entity rather than the pandemic itself. So measures taken by the government, such as lockdown, implementations of lockdown, where businesses are not allowed to operate. Under the relaxation of lockdown, the government implemented social distancing, where capacity of your businesses are affected and etc. So all these measures taken by the government is affecting the business entity. So what do you think? Now, the measures are taken after the year end. So is this an adjusting or non-adjusting event? Now, as the measure was introduced after the reporting period, it is basically a non-adjusting event. Thus, there is no accounting entries needed for this event. However, as the event has a material impact, there is a need for the entity to have a disclosure for this event. So that's all on our IAS 10.